This is the High Voltage Business Builders Podcast, daily intelligence for serious e-commerce portfolio builders across Amazon, TikTok Shop, Shopify, Walmart, and every channel that moves the needle. Neil Twa and his Voltage team all day, every day, since 2012. Let's get into it.
Quick question before we get into it. If a customer returns a product they never actually sent back, who eats that loss? You do. And Amazon's automated refund system is perfectly happy to let that happen on your dime. It's Wednesday, July 1st. Welcome back, folks. On behalf of myself and the entire team at Voltage, we are glad you are here with us for episode 311 of the High Voltage Business Builders Podcast. Now, lock it in. Here's the reality. Returns fraud is not a fringe problem. It is a margin problem sitting right inside your account, and most operators have no idea how much it is actually costing them. Today, we are talking about what is changing with Amazon returns policy, what every seller needs to do right now, and how to stop the bleed without torching your customer experience in the process. Look, returns are not going away. E-commerce return rates run somewhere between 20 and 30%, depending on your category. Apparel is worse. Electronics are brutal. And when you stack Amazon's default refund before return model on top of that, you have a system that was designed for customer convenience, not seller protection. Here is what most operators get wrong. They treat returns as a customer service issue. It is not. It is a margin and inventory issue. Every return that hits your account costs you in three places: the refund itself, the reprocessing or disposal of the unit, and the lost velocity on that SKU while it is sitting in limbo. I have seen operators running $20,000 to $40,000 a month who have never pulled a single return report. They just accept the charge and move on. That is not running a business. That is running a charity. Amazon has been tightening return rules, but they are doing it on their terms, not yours. Returnless refunds, automated approvals, and the new policies around high return rate ASINs all put pressure on sellers to absorb costs that were never part of the original margin math. Here is the real issue. Refund fraud is not always some organized crime ring. Sometimes it is a buyer who figures out a loophole. Sometimes it is a competitor gaming your listing. And sometimes it is just Amazon's own system issuing a refund before a return ever shows up at a warehouse. The conventional wisdom is to be lenient on returns so you get 5-star reviews. And yes, customer experience matters, but a 5-star review does not pay your restock fee. Being a pushover on returns is not a customer service strategy. It is a margin leak with a smile on it. The fix starts with data. You need to know your actual return rate by ASIN, not your blended account average. One problem SKU can mask 3 healthy ones. Let me give you a real picture of what this looks like in practice. I talked with an operator running about $65,000 a month across 14 SKUs, decent volume, solid brand. He came to us because his net margin kept shrinking even though his revenue was growing. On paper, things looked fine. In reality, one SKU, a home goods product in a mid-price range, was running a return rate north of 18%. When we dug into it, 3 things were happening. First, the listing photos did not accurately represent the product size. Buyers were surprised when it arrived. Honest mistake, easy fix. Second, there was a cluster of buyers, about 11 accounts over 90 days, who had each ordered and returned the same ASIN multiple times. Amazon had auto-refunded all of them. Third, 2 of those units were never actually returned to the warehouse. Amazon refunded the buyer anyway. He had never filed a single reimbursement claim. He did not know he could. He was sitting on roughly $40,200 in unrecovered losses just from that one SKU over 6 months. We fixed the listing. We filed the reimbursement claims. We flagged the repeat return accounts through the proper reporting channel, and we tightened the product packaging to reduce the not-as-described returns. Return rate on that SKU dropped from 18% to under 6% in 90 days. Margins recovered. Not because we got lucky, because we treated the return data like what it is, a signal that something in the system is broken. That is the operator move. You do not just absorb returns, you investigate them. Most sellers at every level have at least one SKU doing this right now. The question is whether you know which one.
Would you like to add $100,000 of net profit to your bottom line while saving 17 hours a week doing it? That's exactly what we built Voltage Business Builders for. It combines the power of experience and being in the right room with the power of AI to compress time and increase your business profits. More than AI for the sake of using AI. It's a room full of senior sellers with over 15 years in e-com, showing you the ropes of AI, business building, and creating generational wealth through business. Visit VoltageDM.com to see what's inside the Voltage Business Builders room. And now, back to the podcast.
3 moves. Do these in order. First, pull your return report by ASIN this week, not your account summary. By ASIN. Go into Seller Central, run the return report for the last 90 days, and sort by return rate. You are looking for anything above 10%. That is your problem list. This one sounds boring. It is also where the money is. Second, audit your reimbursements. Amazon owes money to most sellers who have been running FBA for more than 6 months. Units that were returned but never restocked. Refunds issued before returns arrived. Units lost or damaged in the warehouse. There are tools that do this audit, or you can do it manually. Either way, file the claims. I have seen operators recover $8,000 to $15,000 they did not know existed. That is not found money. That is your money Amazon is holding. Third, protect your listings from driving unnecessary returns. Look at the top return reasons on your flagged ASINs. Not as described is almost always a listing problem, not a product problem. Fix the images. Fix the bullet points. Set accurate expectations before the buy. A buyer who knows exactly what they are getting does not return it out of surprise, and they do not leave a bad review either. Now, for bigger operators running 50 or more SKUs, build a monthly return audit into your operating rhythm. Make someone own it. It is not glamorous, but unmonitored returns at scale can quietly erase $50,000 to $100,000 a year in margin you thought you had. Fraud prevention and customer experience are not opposites. Accurate listings protect both. Claim what Amazon owes you. Know your numbers by SKU, not by feeling. If today's episode hit close to home, especially the part about returns eating margin you never tracked, that is exactly the kind of problem that gets worse when you are staring at too many tabs with no clear picture of what is actually happening. Most operators are drowning in data right now. Ads in one tab, inventory in another, listings, pricing, reviews, return reports, all separate, all screaming for attention. And AI tools look like the easy answer. But here is the problem with that. Bad data in means bad calls out. You do not save time, you make expensive mistakes faster. That is not freedom. That is chaos with nobody steering the ship. Here is what actually works. Caiman Data pulls your live Amazon numbers into one clear picture. Ads, listings, sales, inventory, all of it. You see what is working. You see what is costing you money, not another spreadsheet that eats your Sunday afternoon, and you stay in charge. You see the reason before you say yes. Nothing moves without your approval. You are the CEO. Caiman Data just makes sure you are making decisions with real numbers, not guesses. That level of review, the kind we talked about today, used to eat hours every single week. Caiman Data cuts that down with one live connection to your account. That is how Voltage helps operators save time, protect margin, and grow without losing control. We have been doing this for over 13 years. We have seen what disciplined, data-driven operators build, and we have seen what happens when they fly blind. Do not fly blind. Learn more at VoltageDM.com. Thanks for being here for episode 312 of the High Voltage Business Builders podcast. We will see you back here tomorrow. Until then, stay high voltage.